Yes, students. So now we will start with the new chapter called a conceptual framework for preparation of the financial reports under Ind AS. So what is this conceptual framework? This is like a base. This is like what I can say a grand principle. It says that look, whenever any Ind AS is silent about something, it doesn't speak about something, go and refer this. Now, the conceptual framework is not a standard, keep it in mind, and it is not going to override any standard also. It's like one guideline to us, what we should be, what we should do. At a very high level, it has been discussed, highly philosophical. Now, you have got a better guideline, which is accounting standards or Ind AS, you follow that. It is like when you are in a confusion, what is accounts? They are going to speak now. Conceptually, what should be the conceptual framework? In confusion, what you should do? So, ICA has developed a conceptual framework under Ind AS corresponding to International Accounting Standards Board's conceptual framework of 2018. So, now everyone is aligned with the international standards. Everything in Ind AS applicability, we will see that history of Ind AS and all, how that alignment has happened. So, what is the conceptual framework purpose? It helps in setting up the standards. Like suppose you want to come up with one new standard, what is the guideline for you? It helps in assisting in establishing new standards, formulation to be based on some consistent concepts. Now, it should be an expense or should not be an expense. Like change in the depreciation method, is it a policy or is it a, what is that called, estimation? Lot of debates are going to happen on that. Somebody will come with some different school of thought. Somebody says, no, sir, it's like this. Now, what we have to do it in a right manner, that is conceptual. It assists the preparers to develop accounting policies when no Ind AS is applicable. Like, so you come across one new type of scenario. Now, what we should do, like for example, when you are eating food, somebody comes. One stranger comes, he says, I am hungry. What we should do? What is the framework for us? Some of the houses says, no, go. We will not entertain you. Somebody may entertain them. Now, what someone should do in the absence of clear-cut policies, that is the conceptual frame. Policies are there, everything is there, then that is going to guide you. But in the act is there, that's what, this is one conceptual framework is not going to override anyone. Every act is going to come into picture, standards are going, that's what they said, it's not going to override the standard means forget. Act comes before standard, no. If it cannot override the standard, how it can override the act? It's the model, one model we can say. We can say it's like a gap, it's like a best practices. Now, it will help you to interpret the Ind AS, assist all the parties to understand and interpretation of the Ind AS. So, first thing you need to understand, a conceptual framework is something, it is like if at all Ind AS was not there, we would have been looking at this one. Ind AS is much more clear and specific to the transactions. This will talk in general, it will tell what is an expense. Now, Ind AS says that gives you much principles like expense is something like if you are not going to get the future economic benefits, charge it as an expense. But here it will tell you what is the definition of an expense. Am I going to get that in the future, or what if this money has come from my parent? So many things, definitions it speaks about. Now, general purpose financial reporting, the objective is to provide the financial information about the reporting entity which is useful to the investors, lenders and creditors. See, even general purpose financial statements are meant to 7 set of people like general public, government, employees, labor union and all. But among all, the primary focus of general purpose statements, what annual reports are getting prepared, no? It is prepared for 3 set of people, investors, lenders and the creditors. Why? What for? To make and take only one decision about providing of the resource, because without resource, students, nothing is going to happen. Who is telling? Economics is telling. Capital is required. Somebody may use their mind and make some money with thinking only. That thinking itself is one investment, no? So, without investment, I don't think so. Anything is possible in this world. And to do that thinking, investment has to happen on that. Like I believe, see, to make money in life, there are 3 ways you can make the money in life. What are the 3 ways? Cash comes from 3 sources actually to you. If you observe very closely, which are all the 3 sources from which the cash comes to you? Okay, whatever, how it comes to you? See, always no, the first source is begging. Begging. By begging, cash comes to you. That begging can happen with a third party, or we can ask our parents only. We don't call it begging. We'll ask our parents. That is one source where it doesn't need any investment or whatever it is. It is one source of thing which is not sustainable. The second source is the manipulation. You manipulate people. No, not business. Business is not manipulation. Business is the third one, or you carry out the business. I'll tell you what it is. The second is the manipulation. You simply manipulate. OTP you share, you do this, or you say you sell some substandard product and say this is a fantastic product. You create one expectation. And the third one is to do the business. What is that business? Solve problems. Solve problem. That is your business. But how do you, what you do there business? What business you do? You solve your employer's problem. And that is a respectable and sustainable way of earning money. Because this needs 2 things. An opportunity is required and a skill is required. Skill is your choice, opportunity is a chance. So we have to focus more and more on problem solving, and that's what we are learning also in FR. You take it audit, you take it DT, IDT. We are learning only problem solving so that we will make it as our business, not manipulation, not begging. Followed, no? Now, that problem, that to run this business, you need, somebody may say, sir, I can earn money by taking lottery also. Now, for that purpose, I gave this example. Is it one source? No. But where do you get money to invest in lottery? That should come from one of the sources, no? And to do the business, to start, you need a capital. And capital is provided by these people. Or you can yourself, again, somewhere you need that capital to start with. Now, limitations with the general purpose is they do not provide all the information to existing and potential investors. Yeah, we know we have got our own limitations of financial reporting. They are not designed to show the value of the reporting entity. They will show the monetary value, something like financial reports. But what is the value? They help to estimate the value. Your valuation may be more than your balance sheet is showing. But your balance sheet will not show the value of the business. Somebody will value 5 times your EBITDA. They are not primarily directed to the other parties, regulators, members of the public and all, but primarily they are focusing on the decision makers. And what type of decision to provide the resource or not, because that is the starting point for the business. The resource stops, the business ends. So we have to, when somebody is going to design any standard, and that's what now when you have, see, if I have to start it at this chapter at the beginning, the way they have given, this becomes pure theoretical part. Now you look back at all the standards what you have studied. You see the way they have designed, what they are trying to tell there. They are trying to tell, look, this is the substance we have to bring. From whose perspective? From the investor's perspective, lender's perspective, so that they can take a decision whether to give the money or not, give the resources to us or not. Now, information provided, what type of information? Primarily the financial information, what you are going to provide to the investors are 2. Either of your financial position or effect of the transactions. The financial position is subclassified into economic resources and the claims. In layman language, we call assets and liabilities. And the effect of transactions, we can say, talk about the equity transaction directly with the owners like dividend distribution, or it can be P&L, or it can be cash flow transactions. Now, what is the correlation between the general purpose financial reporting and decision making? Why we are focusing like report and decision? What type of correlation we want to see? See, these questions they may ask you in the exam on a standalone 5-mark question. Now, what they need is the information about the resources and the claims and the change. What information these decision makers need? They want to know how much asset. That's why you go to a bank. What bank will ask you? First, they will ask you, what is the asset? Tell me. Because if you don't repay me, I should take that, no? Then they will ask you, what is your business? Because they are looking for the change in the claim resources. Do you already have got any loan? Then I will try to secure myself and try to give the resources to you. And who gives this information? A financial info, a general purpose financial statement, a balance sheet. Why? Because from this, they can make an assessment of the timing and uncertainty of the future cash inflows. Then I can take a proper decision there. So, and I can check the stewardship of the entities, like how well you are using the resources. Why such assessment? Because I can develop one expectation of the returns. No, because I give you money only with one reason, that I will get my money back along with certain returns. I'm not into charity, no, I'm into a business there. I want to solve your problem and get paid. And banks, what resources they have got? They have got money. And they reach the people who have got a problem. Who is that? Business people, because they want money. So ultimately, if you see in the society, everybody or the other is solving problem one way or the other, no? And the final outcome will be the decision, should I give or no? So this is the correlationship between general purpose statements and decision making process. If they have this, they can take decision. If they don't have this, they say go back. That's why general purpose financial statements are very integral, because without that the finance is not going to come, and finance is not going to come means blood is not there in the patient. Blood is not there means you literally done nothing doing there. It's a resource, no? Finance is a resource. Now, what is the cost constraint? Like, see, if I have to give some information, the cost, everywhere there is a cost. So, cost is a pervasive constraint on the information, because I have to gather it, buy one tally system, record it, maintain one documentation. I need some people there, pay them salary for all doing this job. Now, it should be, when I do these activities, it should justify the benefit. No? See, as an institution, ICI, I cannot go deeper, do this accounting, do this split, do shift there, go and take the internal rate of return. I cannot impose on you. At one point of time, you will shout it back to me. You will break. Because you are doing business there, not all this type of things. Now, that's why both the providers and users incur the cost, because I will give you very complicated interpretation. Will you understand it? No, you will go to another CA there. Now, another CA will charge you to understand the financial statements. So, both the people are going to incur the cost in reporting also, analyzing also. That's why whenever any standards are formed, ICI seeks information from the providers of the information, users, auditors, academics. See, what all things you have been reading, no, in this, it is not one person's work. It is the cooperative work of entire modern humans. All people's experiences, judgments, observations have flown into it. So, and others about the expected nature and the quality of the quantity of the benefits, and then they decide the cost and the benefit. So, and that too they decide from the financial reporting generally, not from one entity's perspective, because again cost benefit is a very inherent subjectivity is there. So, should I do that? That's what they have given, so many practical expedients, so many choices they have given. Why? Because they understand this doing all these activities is going to create a cost. It doesn't earn any revenue as such. It will facilitate decision making, but that decision is very difficult to correlate now. Because of this type of information, what type of decision you took and how much benefits you got. But without this decision, your information, your decisions are going to go for a toss. That's why Warren Buffett said, if you want to understand the business, you have to learn the language of the business, and the language is considered as accounting. See, there are three languages: finance, accounts, economics. These are all the three primary languages of the business. Now, Warren Buffett said, if you want to understand the language, no, first you catch hold of accounts, because finance is futuristic. It is decisions. Economics is decisions. But accounts is not a decision. It is history. You record it and give certain informations. Now, both of them need this historical information to predict the future, because life itself is uncertain. And life is uncertain. Business is uncertain. Next is uncertain. So these people, information can go for a toss if this information is not proper. That's why we are trustworthy people. We have to ensure. That's why in ethics, technology, everywhere, they are giving importance. Like we are trying to shift ourselves, and I've been told earlier also. We were bookkeepers at one point of time. Today we are trying to become conscious keepers. So that decisions of the people, whether it is an internal or external, are very valid and authoritative. Correct. Because they trust us. And we are capable. Imagine if we are not there. Our profession is not there. Havoc. Havoc. No big banks, institutions, companies, nothing would have come, students, because you know where people will keep their money. People would have kept their money with themselves inside their home. They would never have departed with their money. So today when you are keeping money in the bank, you have got a trust that the bank is going to give you, because law is also there. Supporting accounts, you have got a law framework also, otherwise law will die there. Now these two things will ensure and create some trust for you that you are going to get your money back. Imagine if accounts is not there, the trust is lost. If people would have remembered, you go and kept money in Karnataka bank, and if the manager says, sir, if I remember, I'll give your money back, you'll never deposit. And if you don't deposit, no mobilization is going to happen. Then all this big dam, your flyover, road, all these things you would not have seen, no. You would have still seen that bullock cart and other things. It's all the small savings got accumulated on a trust, and the trust is law and our accounts. Anyhow, these are all clear, no? This is what? Conceptual, no? So we'll speak conceptually, high level. What is our role in the society? How? That's why all this time we have to devote to this. Now, what are the qualitative characteristics of the useful financial information? Okay, before this, we will solve one theoretical questions. See, today, just now we have seen the what that called general purpose financial statements, cost constraint and all of the thing. We will see some questions, how it may appear in the examination. Then you get a better understanding. The directors of Hind Limited. Okay, are you clear with the general purpose financial reporting? Conceptual framework? Now you should be able to answer this, no? And standards, so you are already completed. Now the directors of Hind Limited are particular about usefulness of the financial statement. They know that. They are very particular. They know that how useful their financial statements are. They have got an opinion that although Ind AS implement a fair value model, Ind AS has given you fair value model today, correct? They fail in reflecting the usefulness of the financial statements, as they do not reflect the financial value of the entity. Discuss the views of the directors as regarding the use of the fair value in Ind AS and the fact that Ind AS do not reflect the financial value of an entity, making special reference to Ind AS and conceptual framework. With this question, you understand, with this sentence, you understand that this is that conceptual thing they are trying to ask you. They will give, don't worry. Otherwise, how on earth you will understand that you have to apply this? They will speak only from the perspective of Ind AS. Now, what is the question here? Here they are telling, look, you are using Ind AS, but does it reflect the value of the entity? No, that's the financial value of an entity is not reflected. Now, for this we have to talk about the usage of the fair value. Under Ind AS, what you do? The statement of the directors is not entirely accurate, although Ind AS do use the fair value, which is nothing but a present value. It is not a complete fair value system. Ind AS are based on the business model of the entity, correct? No, we always go with the, it's not just fair values, we always go with the business model also. Therefore, there is a mixed measurement system. What is preferred is a mixed measurement system. Sometimes you go for a cost, fair value. Ind AS 113 defines fair value is the price that would be received to sell an asset in the between the market participants on the measurement date, and this is an exit price. Ind AS 113 has given consistency to the definition of application of the fair value, and it is applied across all the standards. However, it cannot be implied that Ind AS require all the assets and liabilities to be measured at a fair value only, because there is something called a different measurement basis. If you go to PPE, they say that you start your measurement with the cost. Later, if you want, you shift to the cost of fair value. 109, it starts straight away with the fair value. So most of the items have got at a depreciated value also. However, in business combination, you start with the fair value. That means sometime you do the fair valuation, sometime you don't do the fair valuation. Now, examples of use of fair value, like Ind AS 16 talks about the revaluation, Ind AS 40 talks about the disclosure of the fair value, 38 talks about the fair value with respect to corresponding change in equity. You go only when there is an active market, then only you go for fair valuation. 109 says that you have to use the business model to determine whether amortized cost or FVTPL. So these are all the examples of use of the fair value. Now, what is the financial value of an entity? Now, this is discussed. Actually, again, I could have discussed this question later. There is something called the physical capital, financial capital. Now, although Ind AS makes use of the fair value, the financial statement prepared under Ind AS are not intended to aggregate the aggregate value of the entity. This is what we discussed. There is a problem. It cannot tell you the value of the entity. It will tell you the fair value of the assets. Now, value of the entity can be more than that. Like, for example, what is our value? Now, when you ask someone, okay, who is much materialistic, that person values based on what material things we have got. But if you go to one person with a wisdom who understand how precious human life is, how distinct it is, their valuations will be more. But that our materialistic balance sheet will not reflect that. No, it will reflect the value of individual assets. This is what they are trying to tell, that you use Ind AS. Ind AS will give you what? Value of the individual assets and liabilities, which is a fair value also. Sometimes need not be fair value, cost also. But does it reflect the individual value of the business as a whole? No, it will not tell you. No. Now, what about the conceptual framework? The conceptual framework states that the general purpose financial statements are not intended to show. That's also like conceptual framework also says. That means my Ind AS and conceptual frameworks are in line now. If my conceptual framework should have told, like, look, your financial statement should reflect the value of the business, then Ind AS should have been drafted in line with that, so as to reflect the value of the business. So the value of the reporting entity, furthermore, such attempt would not be fruitful because internally generated intangible assets cannot be recognized. Yeah, some of you have got fantastic intangible assets. Standard says don't recognize it, but that does mean that you don't have it. You have it. Is it not valued? Yes, somebody takes over you, you will be valued. Internally generated intangible asset, like you have got a fantastic understanding of FR. Is it an internally generated intangible asset? Can you recognize? No. Why? Why you cannot recognize your knowledge of FR? No, how you will recognize? Is that the value of your intangible asset? Okay, is 7,000 rupees the value of your intangible asset? No, Baba. You understand, is it an asset? First of all, knowledge of your FR is an asset. Is an asset. Did you acquire it by paying 7,000 to me? Did it acquire it by paying 7,000 to me? That's my question. No. You have paid me, but more than that big investment you have made by sitting here. That's all. No, that's see, ultimately the intangible asset is going to come to you when you are going to sit and do it. Followed, no? That's what that's going to, and that cost you cannot apportion it. How much cost you have incurred for it? How much time you have spent? How much thoughts you have made about in FR? That you cannot figure out. No, you cannot classify, right? That's why that's actually a big investment, no? And that's what you recognize only 7. But here intangible asset you are not going to do it. Only reason because it is not just 7,000 rupees you have paid. And what? Okay, you have paid it. You will recognize an intangible asset only to watch my classes. That's your intangible asset. I have given you one recorded lecture. Can you watch that for next 1 year? You have got a validity. Is it your asset? Yeah. To that extent, 7,000 you have to amortize over next 1 year. So you have got a right to use that asset. But is it your intangible asset? I asked your FR knowledge. Your FR knowledge is different from what you got a right to watch my classes. No. Is my class and your knowledge is same? No. That's what I'm trying to tell. And what is the cost of your knowledge? Exactly. It's an internally generated. Because you have put so much efforts and time there. And that all things are not reflected in the different ways of valuation of the business. No, that's what if I go to the general purpose statement, one of the limitation of the conceptual thing is they are not designed to show the value of the entity, but they will give the information to estimate the value. They will give you EPS so that you can value it. But my financial statement itself will not show you the value. And the reason is there are so many intangible assets which are not recognized. That's why what is the value, it will not tell you. Neither your index is going to tell you, nor your conceptual framework is going to tell you. Liquidation, but you are not into liquidation, right? You are going as an entity. Somebody may value it, no. If it is taken over, somebody will value. Instead, the objective of the general purpose is to give the useful information to the potential investor about providing resources. Okay. No, then you will state at a replacement cost or something. No, are you understood what they are trying to ask here? That is very important. We should not get flown. Here the crux of the question is, look, directors are telling that Ind AS ask us to do the fair valuation, but that doesn't reflect the value of the entity. Is it okay? Yes, then you will talk about 113, what is fair valuation, what different measurement bases are there. Now, what is your opinion about the conceptual framework? Is conceptual framework is talking differently? No, conceptual framework also says that yes, financial statements will not reflect the value of an entity because they gave one example of intangible assets. This is one example they give. Followed, no? Because they will ask you a question in the exam also on this. No, we'll see, no, what type of questions have come. Discuss the following in the context of conceptual framework. Understood that this is from conceptual chapter. The cost constraint on the useful information. Then you have to tell that yes, there is a cost constraint. ICA is going to seek with the general information providers reporting. We discussed, no? And what is executory contract? Executory contract is that contract where both the parties have not performed anything. Probably this is, you must be searching. You saw, no, somewhere in the examination question. It may be, now you have to talk it from the conceptual, because conceptual also says the same thing. What you are, see, first of all, Ind AS is designed keeping conceptual framework in mind. Now, what an executory contract, a conceptual framework says versus what your Ind AS says is not different. But sometimes there may be differences. We will see now what it is. We just begin now. Now, role of the cost, basis of the assessment of the cost. So, ICA is going to make an assessment. So, you have to look it from the general perspective and not individual entity specific. Now, what is an executory contract? It is a contract in which it is equally performed or both the parties are not performed. The outcome will be they cannot be separated. Okay, executory contract established a combined rights and obligation to exchange economic resources. See, this type of languages you can see in only conceptual framework, not in Ind AS 37. That's why you have to explain that language. The rights and obligations are interdependent, hence combined rights and obligation constitutes a single asset or liability. The entity has asset if the terms of exchange are currently favorable, liability if unfavorable. So, whether such as asset is an asset or a liability included in the financial statement depending upon the recognition criteria, whether it is onerous or not. That means, if you have got a, first of all, you say here, they said explain executory contract. You say that executory contract is one where both the parties have equally performed or both have not done. Should I recognize such contracts? That's what they asked you, conceptual framework. You should say that I should recognize only when it is my liability or when it is my asset. Now, what is an asset? something which is favorable to me. Like for example, derivative is your executory contract. Yes, but the moment you are in a favorable situation, will you pass an accounting entry derivative asset going to be to income? That's what they said. If an asset, it can be an executory, not it option date is there in the future. But if you get into a favorable situation very next day, even in that executory contract also, you can pass and recognize the accounting, recognize the entry. Who says? Conceptual framework says. Now, Ind AS has given own use exemption to avoid the headache to the management. But conceptual framework says, look, I am not talking about any particular entity or organization as such. For me, if an asset is there, you have to recognize it. Now, whether you should recognize or not recognize, you please look into Ind AS also. If Ind AS is silent and you are coming and asking me, sir, I have got one executory contract, should I pass any accounting entry? Then I say, if you ask me, I first say, please go and check any standards. I cannot override any standard because standards gives you better clarity over existing situation. You come and say, sir, Ind AS 37 has given only definition of an executory contract. 109 has given only definition of a derivative instrument. Both are silent. Please tell me, sir, should I recognize the asset or not? Then I say that, look, executory contract, no? Yes. Now, are you into a situation of favorable or unfavorable? Recognize. Followed, no? Executives are in the nature of derivative. Forward contract. Example, like today, you have placed one order today on your birthday on 30th February. Okay, whichever date, on 30th of March, you have got one birthday. Then that caterer said, I will supply the food. Is it not one derivative contract? Today only, that's why we fix the price today only, no? It become a derivative because, see, at this price you are going to get that food on 30th March. Then again, it depends, we have to check into the case situation. Because if you see one of the case situation that, who is this, in analysis of the financial statement, you are going to come across Neelanchal and Uttaranchal. One derivative contract was entered into to get the gas in the future, fixed price was paid for the, something like that. That is also a derivative contract. Followed, no? So now, should I recognize or not? That depends upon the recognition criteria and the measurement and whether the contract is onerous. If it's a contract is onerous, you have to recognize. And if it is in a favorable situation, I may say that if don't recognize it. Unfavor, recognize it. Conservative. Followed, no? So understood this question? Followed, no? You are able to distinguish between a standard and conceptual framework now? Understood? Both are different. What standard? It says that, it says very clearly, the moment you feel that it's an executory contract, you have to make a provision which is what? Lower of. Conceptual framework doesn't say this. It says that check for whether it is onerous and make a provision. It says make a provision lower of termination or execution. That's what onerous. This is the provision I need to make. No, what is your extra outflow because of execution of the contract? Loss because of execution or loss because of termination, whichever. Then you don't pass any accounting entries. Why? Ind AS 37 has told. That's why if your Ind AS is specific, you will give preference to it. You will come back to this only when there is no clarity. And Ind AS is designed based on this only. Followed, no? Next, the qualitative information, qualitative characteristics. It says that if the financial statement is to be good enough, what are the qualitative characteristics of the useful information? It says it should be relevant and it should give a faithful representation. When it is relevant, it can be relevant only when it gives you a predictive value. You can use this information to predict something and confirmative value. Now, predictive value means, like, suppose you start giving mock test. Is that mock test result has got a predictive value? Yes. Using that, I can at least predict. At least I get a better basis of what you are going to do. Is it has got a confirmative value? Yes, no? Because The moment you give the second test, okay, you are given one test, at least I can predict what may be the level. The moment you give the second test, I can use that second information to recheck my previous evaluations. Then you call it relevant. And if that information doesn't have these characteristics, then you say it is irrelevant information. Don't give this. If I cannot predict your performance, then that information I don't need, no. Like if I have to look it from an academic perspective, what information I need now is how well you think in the examination and how you are going to react in the exam. Do I need an information how good you are, how bad you are? You are doing so much social service there outside. Why on earth I need that information, Baba? What is my objective? I am a very commercial guy. I mean business, investors. They say that, look, I am looking for return. Why on earth you tell me other information that this company is having good values and all? Okay, that's it. From commercial point of view, it has got thing. I need that information. If your social service is going to help you to perform better in the examination, I need that information so that I can predict using that information and I can confirm it back. This is like a feedback. Are you clear? So whoever gives the financial information in the financial reporting, annual report, they have to keep this in mind. What is relevant? Now, what is faithful representation? To be useful, it must faithfully represent the substance of the transaction, not the legal form. So many places, substance and the legal forms are same majority of the time. If not, you just give the legal information is actually not a faithful representation, it is misleading. You go back to our Indians now. We will give irredeemable preference shares, redeemable preference shares classified as capital. You give a faithful representation, no, tell them faithfully. We say good faith, we say, no. So to be perfectly faithful, there should be three characteristics. One, it should be complete in all respects so that you can understand with necessary descriptions and explanation. That's why we write notes to accounts. Second, it should be neutral without any bias in the selection and presentation, and it is coming out of your prudence, judgment. The prudence is the exercise of the caution when making judgment under conditions of uncertainty, like assets and income should never be overstated or understated. Liabilities and expenses should be never stated, overstated or understated. See, in my example of that Ind AS 8, you are preparing batter for tomorrow's guest. You should be neutral, no? Your objective is you should not prepare too much batter, then you only have to eat it for next 3 days. You cannot prepare too less batter so that it's shortage on that day. And that comes out of your prudence, your caution. You have to make a very proper thing, and for this you have to remain neutral also. Now, it should be free from error, means there is no errors or omissions in the process used to produce the information that has been selected and applied with no, okay. The reported information has been selected and applied with no errors in the process. That means entire process what you do, like if you have to prepare a batter, the batter will go through certain set of processes. That entire set of processes, there should not be any mistake. You have to have that clarity. If at all, say for example, mixer grinder is not washed on, and you started preparing that this thing, some batter, and there was some flavor of some, what is it called, your favorite vegetable is there, no? Yesterday only that Karela juice you prepared, and you didn't wash that mixer grinder, and you prepared this masala dosa batter. Now, output is going to change now, because process something went wrong. So in this context, to be free from error, it does not mean to be accurate. Like if you made certain estimates, what is faithful, free from error? You first tell very clearly that it is an estimate, don't misguide them. Don't give that false assurance that it is going to happen. It's just estimate, tell them very clearly, so that somebody will not develop an expectation there. Nature and limitations you have to explain in making such estimation, and no errors have been made in selecting and applying appropriate processes. So what you should do in this, there should not be any error. So this is called faithful representation. In examination, if they ask you, please tell on faithful representation, you have to tell that faithful representation means talking about the substance, and that can be possible only if 3 conditions are fulfilled: completeness, neutrality, and free from error. To be neutral, you need to exercise your prudence, and to be free from error in estimations, you have to give these three things. And how can you enhance the qualitative characteristics now? This faithfulness, the trust, and your relevance, how can you enhance? Make it more comparable with other entities or with you only over another period of time. Verifiability means different knowledgeable and independent observers could reach different consensus of the page, although not necessarily a complete agreement. So both may not agree, but reasonably somebody will reach a proper conclusion there. Like they can do a direct verification, like for example cash. You can directly verify and both will add to the same consensus, or indirect verification, like verification of the book value of the inventory, checking of the inputs to a model, like you created one model, you give the inputs there, automatically some stock valuation comes. People may disagree, but okay, it gives a fair estimation. And timeliness. You have to have quick, because the older the information, it becomes less useful. And last is understandability, like classifying characteristics, presenting, it should be very clear and concise. And someone with the reasonable knowledge of the business should be able to understand. Yeah, this is there in the audit also. In the second chapter, you have come across it. Is the qualitative characteristics of the useful financial statements or financial reporting framework. And this is all given not for us, it is given for the management, because we are not the preparers, no, we are the comparing what is prepared with the benchmark. Since we have to compare with the benchmark, we should also have the knowledge about it. Okay, now let us see one examination question which is asked on the qualitative characteristics, not examination, they may ask you these questions. Discuss, and this type of questions are very simple, students. That's why you see whatever questions have been asked, the first question what we discussed, confusing, but they didn't ask you, they are asking you straightforward questions from this question. See, last question they asked you, what is that? Owner's contract and cost constraint. Is it a L1 question, no? Knowledge question? They asked you, discuss in the conceptual framework, what is faithful representation? Is it not an L1 question? You have to tell that perfectly faithful means there should be three characteristics, prudence should be there, free from error should be there, finish. Now this question, they are not asked till now, and I don't know when they will ask you. Read this question. As at 31st March 2012, Natasha carried out the trade receivable of 280 in its balance sheet. Now as at that date, Natasha entered into a factoring agreement with Samantha Limited. Understood? What is factoring? You sell that. Sell your debtors to them, they will take care. For financial institution, according to which transfer trade receivable in exchange for immediate cash of 250. They gave me 250, I gave my debtors to them. Now as per agreement, any shortfall between amount collected and 250 will be reimbursed by the Natasha. Like if they are able to collect only 200 out of this, 50 I have to pay to them. And once the trade receivables have been collected, any amount above 250 less any interest on this amount will be paid to Natasha. If they collect full 280 out of 280, 30 they will pay back to Natasha. The directors of Natasha Limited are of the opinion that the trade receivable should be derecognized from the financial statement. You are required to explain the appropriate accounting treatment of this transaction. Question number 1, this is coming from which standard? Which standard you will use to explain the accounting treatment? 109. Is there any chapter or aspect related to this? What is that? Did we discuss anything in 109? One question is there, no? It is called a derecognition of the financial assets and financial liabilities. Partial derecognition, full derecognition. There was one chart, no? You have to go through that chart. Have you transferred? Is any cash flow expired? No, then partial or continuous involvement approach. Now, also evaluate the transaction in the context of conceptual framework. What the conceptual framework is going to tell about this? Should you derecognize it? Forget, if the 109 was not there, what you would have done? Directors are telling, see, we have sold it, so we don't need it, we don't need the debtors anymore. So we will pass one accounting entry to debtors. Now Ind AS 109 is not there. Now what you would have done? You would have gone to the now you would have come very good. What you said? Faithful representation. Exactly. Now you have to tell something which is relevant and faithful. Is it faithful now that you have sold some debtor, but still risk and reward you have retained? So it is not a faithful representation. No. This is what you are going to tell from the conceptual framework. Conceptual framework doesn't know whether Ind AS is there or not. It's like one Mahajnani, somewhere sitting like this, one biggest monk. Now small monks are there like Ind AS 109 and all. If they have told you matter is closed, you need not go them. But if they are silent there, then you will go. Then first that monk will say, no, faithful representation should be there. They close your eyes, look, ask your heart and all that will concept come. No, that is conceptual frame. Now you have said very correctly. Perfect answer. But how you should present it to the evaluator? So for this first part, it's very easy. You talk about 109. Already you have studied this. So you say that as per 109, you should have the contractual right, or you should derecognize when? Only when the cash flows have expired, or you have transferred the assets along with the risk and reward. So in the given case, you didn't transfer it along with, see, cash flow has not expired because debtors are still valid. But did you transfer the risk and reward? No, because anything excess collected will come back to you, anything short collected. That means that factor is like your agent. No. So what your 109 says? 109 says that you continue with your debtor, and whatever money received 250, what entry I should pass? Bank account debit to financial liability, because it's your loan. One day or the other day you have to pay. So immediate payment will be treated as a financial liability. This is what your 109 says. Don't pass the entry bank account debit to debtor. Pass an accounting entry bank account debit to financial liability and continue. Exactly. Now you go back to the conceptual framework. If this guidance was not there, what your conceptual framework would have said? They say assets should be derecognized when you have lost the control. Now an entity may appear to transfer the asset or liability, but derecognition is not still appropriate. Like you have retained the exposure to significant positive or negative cash flows. So accounting requirement, you have to faithfully represent any assets and liabilities retained or change in the entity's liabilities. Meeting both the requirements are very difficult. Like you are representing any asset and liabilities retained after the transaction that led to the derecognition, and any change in the entity's assets and liabilities because of the results of the transactions or other event. The accounting requirements for derecognition aim to faithfully represent. You should represent whatever you have retained also, whatever you have transferred also. That's why they say it is difficult both if there is only a part disposal. So difficult to faithfully represent the legal form. That's why in view of the difficulties of practical scenarios, the conceptual framework do not advocate control approach or a risk-based reward approach in every circumstance. They say that, look, I can see your Ind AS is very restrictive. They said control, risk, reward and all. So in such, the treatment as per 109 as well as principle laid down do not appear to be in conflict. Control approach. They say that you go with the case-to-case basis. 109 no case-to-case basis. They say very clearly apply these rules. No, but I'm telling you, if you want, you can do it. No. Okay, that way they are telling it there is no conflict. There is no conflict there. Do not appear to be conflict. It's not that Ind AS 109 say you derecognize. Conceptual framework say do not derecognize. That is conflict. Conceptual framework is much liberal. That's what first we discussed, why we are using this conceptual framework to design Ind AS. If I had to start here, theory, the first purpose of this conceptual framework itself is to assist the preparers to develop Ind AS. So that is why I will go to conceptual framework only if there is no Ind AS available to me. If Ind AS is already developed, definitely my rules and all would have been this thing based, and my Ind AS is much restrictive actually. It's much specific. Then again, there is no conceptual framework will never override, no. And that's what I'm trying to tell. If there was no Ind AS, what would have happened? It would have said, look, case to case basis you can decide, but whatever you need to do, you have to represent it faithfully. Okay, they say that what is the faithful here? Is the legal form is the faithful. Okay, again, some contradictory things are given, but students, you understand here. One thing is we know what is faithful representation, and theoretically talking big things on that seminar and all. Second thing is how to write an examination question, and these chances are these questions will come as it is. So anyhow, once you get exposed, you know it. Now, what are the elements of the financial statement? The elements of the financial statements are your assets, liabilities, equity, which talks about the position, income and expense, which talk about the performance. Now, what is an asset? It is the present economic resource as a result of past events, which will give you future economic benefits. What is your liability? It is the present obligation to transfer the resource. See, it's the same definition of 37(16). Equity is the residual interest after deducting all liabilities. It's the balancing figure. This is the same 37 definition. This is the same 16 definition. Now, income is increasing the asset or decreasing the liability. That changes your equity other than direct transaction with equity owners. Like if the equity people contribute cash, it will increase the asset, but it is not your income. But other than that, if somebody has contributed which you don't have any obligation to pay it back, it becomes your income. And it is going to change the equity. What is your expense? It is going to decrease in the assets or increase in the liability, which decreases your equity. So the difference between net equity at the beginning and the end is nothing but P&L. Other than those relating to the distribution, like other than what the dividend you paid, that is the dividend is not your loss. Other changes in the assets and liabilities, contribution from the holders of equity and distributions to them, exchange of assets and liabilities, like you have taken a bank loan, liability also increased, etc. That means it's not going to hit your P&L account. These are called other changes. So these are all your elements of the financial statement. On this, you can see this type of, actually, if you please, I suggest open the study material after this, okay, after everything, because there's so many things. My focus here is to discuss all these RTP and MTP question, illustration questions. So I am discussing only that much theory which is needed to solve this problem. Clear, no? Because it's too much, 72 pages are there. So many, that's what, no, due priority. If you find time, please read it. It is very nice, interesting, and they may ask you question also from in between. But give first priority to what is the illustration questions they have given. We are taking risk actually, but calculated risk. Now, in MTP 1 question came, what is equity, what is income, what is expense as per the framework? How the information with respect to income and expense help the users in understanding the financial statement? See, the chances of this type of questions are very high. Equity means the residual income, income means increasing the asset, so and so you will tell. Different transactions on event generate income and expense with the different characteristics. So providing information separately about income and expenses can help to understand it better. So instead of telling one head called income, one head called expense, you give the breakup of income, you give the breakup of expense. That's the second part of the question. How income and expenses information help to understand the better? Yeah, if you better breakup you give, they can understand it better. So this is the only question I feel probably may ask you, because whatever questions we have seen, 2 questions, they are all direct questions here. Yes, Dhanush. Yes, now recognition and derecognition. What does your conceptual framework says? Only income and expenses are recognized. An asset or liability is recognized only if no, I think this is a wrong sentence, I have to remove. An asset or liability is recognized only if the item meets the definition of an asset. Whatever we just now discussed. If it is not meeting its definition, there is no question of recognition. And its recognition should provide relevant and faithful information. then only we should recognize of assets and liabilities and resulting any income and expenses. So if an item meeting the definition of an asset or liability is not recognized, entity may need to provide the disclosures. Sometimes something is an asset, correct? Now in PP we discussed, you have got one weapon with you given by God, it's an asset, but you don't recognize it. Why? Because it doesn't meet the other recognition criteria, so you have to disclose. Now derecognition, okay, one question we already discussed was related to this derecognition. The derecognition of an asset and liability that have expired or has been consumed, transferred and recognized resulting income and expenses. That means if it is expired, you have consumed it, collected it, fulfilled it or transferred it, you can recognize. You have to continue to recognize the asset for the retained components as a separate unit of account. But the problem in that debtors question, factoring question, is not you retained a portion, like is it that out of 250, 200 you sold, 50 you retained. And they say that if you have transferred it, whatever differential income or gain you should recognize. No income or expense should be recognized on the retained component. Yeah, because I retained it. As a result of the transferred component, unless derecognition results in the change in the measurement requirement only. Like for example, parent is having 100%, they sell 90%, 10% is retained. Should you recognize the profit on 10% or not? As you should recognize, no? In 110, have we not discussed about the loss of control? In loss of control, what happened? It says that when you lose the control, if any of the portions you retain, will you derecognize the portion which you have sold, 90%? Yes. When you retain that 10%, will you retain at cost or will you restate it at a fair value? What it depends. Question is clear? 110 says that if you had got 90% or 100% was there, you sold 90% and retained 10%. Now this 10%, will you restate it in your consolidated balance sheet? In standalone balance sheet, it must have been shown at cost only, leave it. In standalone balance sheet, it was shown at cost. Going forward also, you have to restate, no? Can you show at cost? Question is clear? Because see, this requires a greater understanding. When you say 90% and 10%, you have got SFS, you have got CFS. In SFS, how did you account? Cost. Which standard? 27. The moment you say 90%, can you tell that I will continue to recognize at cost of that 10% balance? No, because the measurement basis is going to change, because 27 closes forever for you, 109 comes into picture. And the moment 109 comes into picture, whatever the 10% balance is there, you have to restate at fair value. Are you clear? Right? No, not good. Just don't talk. I am just telling one example. Here, suppose in the debtors, or for that any matter, like see, if that asset was already at FETPL, then there is no question, because already it is stated at any point of time at FETPL. But what if you are stated at cost? On the date of sale, the 10% should be recognized at a fair value. So, okay, let us talk about the consolidated financial statement. You had 100% statement. You never recognized 100%. You eliminated full 100%. But on your loss of control, will you continue to recognize 10% in your CFS? If at all you have to prepare CFS because of consolidation, you recognize, no, Baba. Because now what happened? This 10% got shifted coming from your standalone statement only, no? You don't have this subsidiary, but if you have got some other subsidiary, are you going to prepare CFS? Yes. In that CFS, this 10% is going to come. Is it stated at cost or fair value? Fair value. How can you show this 10% at a fair cost anymore? It's an investment in the equity shares. When you talk about subsidiary, equity, no. When I'm talking 110, definitely there's an equity investment in my subsidiary, no, Baba. Are you clear? That's what I'm telling you. See, these are all things, no, more than you have to think. You have to spend time thinking about this, what is this, how it is going, like what they are trying to tell. Is okay? Okay, now that's what this point says, that look, you can recognize the income on the retained portion if your measurement basis itself is going to change. Like when it comes to the debtor, 100% debtor, 90% you sold, 10% you retained. So on 10% you don't recognize any profits. So you split the book value into two portions, 10% you keep only. You don't restate that debtor because it is already restated. There is no change in the measure. But in this case, the 10% now will shift from cost to 109. So an entity might appear to transfer an asset or liability, but a derecognition of asset may not be appropriate. Like for example, that debtor's portion. So if an entity has transferred an asset to another party that holds the asset as an agent of the entity, like that factor case, the transferor still controls the asset. That's why in that previous question they said, see, some theory said, they said, but they said as per Ind AS 109, as per principle laid in conceptual, there do not appear to be any conflict. 109 also says the same theory, no. But to make you confused, they added something like here, accounting requirement and all. Leave it. If you have not understood it, exam, if you cannot remember, leave it. Just tell one word that conceptual framework is in line with whatever 109 says. So for a partial derecognition, there is no problem. So are you clear about the derecognition part? Yes. Now explain, see, again this question came in exam and I can show you the pattern. The pattern is straightforward questions they are asking you. Illustration questions are so big, really conceptual questions. But their question, you see, third question, explain the criteria of a conceptual framework, recognition and derecognition, how it is inconsistent with the Ind AS 38. This was straight away there in the illustration too. Now tell me, is it inconsistent with the Ind AS 38? Ind AS 38 says that internally recognized you cannot know, but this says internally recognized also, it's an asset, is asset only. Now the conceptual framework defines an asset as a right to the potential to produce the economic benefit. So asset should be recognized only if they meet the definition of an asset, and recognition provides the user with the information which is useful. If you tell that you have got a ability to solve the account FR related questions, Ind AS related question, is your employees really happy? But you don't have asset in your balance sheet, no. But that is an intangible asset which is very much useful to the, it should be a faithful representation. But Ind AS says you don't recognize it because you didn't pay any money for it. That is an inconsistency. What? No, it doesn't talk about intangible and all. It says, simply says that when you should recognize the asset. First of all, what is the definition of an asset? Asset is something which will give you future economic benefit. Correct? Your knowledge of Ind AS will give you future economic benefit? Yes or no? Is knowledge of Ind AS is an asset? Asset. Should I recognize in my balance sheet? Now there are two diversions. Conceptual framework says that you should recognize an asset if it meets the definition of an asset. Is it an asset, your knowledge of Ind AS? Yes. And it provides the user with the information which is faithful. So as per conceptual framework, you should have recognized one intangible asset in your balance sheet called the knowledge of my FR. You go to Ind AS 38, which again, conceptual framework will not override them. But ultimately you don't recognize it. Why? Now Ind AS 38 comes into picture and says that internally generated you cannot recognize, because they add one more fitting that cost should be measurable reliably. Otherwise this definition and that definition is almost same. except one cost element. Now, Index 38 says that it should be controlled and future economic benefit should come, and it should be probable and cost should be reliable. It will give one more fitting there. Identifiability should be there and cost should be, you should be able to measure reliably. So this requirement is applicable for externally acquired intangible and internally generated intangible. The probability of the future economic benefit must be based on the reasonable estimate and assumptions. Further, probability of the recognition criteria always considered to be satisfied when the intangible asset is acquired in the business combination. This is what we discussed there also. In business combination, you can recognize an intangible asset if you have paid a price for it. FR knowledge is not your intangible asset. It is intangible asset, but you cannot recognize intangible asset because cost is not measurable reliably. But if your employer has entered into a 3-year contract with you, the next 3 years you have to work with him only. You cannot work with anybody else. Can they recognize your asset knowledge as an intangible asset? Have we not discussed that in Mumbai Challengers case and all? When you into a contractual you bind, see, employees are not your intangible assets. But if you can contractually bind an employee for next 3 years not to go anywhere else, then you may, and for this you must have paid some lump sum, then you can recognize it as an intangible asset because it is treated like a business combination. It is notable that the conceptual framework does not prescribe any probability and all. They say that even though it is a low probability, you should recognize. However, in terms of intangible asset, it could be argued that low probability would not be useful to the users as it has got no physical substance. And if they are very low, then why people are interested? The recognition criteria and definition of an asset under Index 38 are different as compared to the conceptual framework. First of all, see, asset is same. When you talk about the definition of an asset, whether Index 38 and conceptual framework, will they both say same? Both are same. But when it comes to recognition, Index 38 says probability and cost. Conceptual framework doesn't say that probability, even though low probability also you recognize. It's very lenient. That's what I told you. Index is very narrow. Because why somebody will argue, sir, if there's a probability is very low, how it is useful to the information users? To put in simple words, criteria in Index 38 are more specific and definitely provide relevant and faithful information which appear to be consistent. That means what they stand the Index 38 has taken is keeping faithful representation only, because they say that the cost, if a probability is relevant for the users, that's why it's consistent. Vague, no? Yeah, but again, this question is already, what the question they asked you previously, a knowledge question, was not there in your test your knowledge illustration. They asked you from in between. But a question which may require some type of application, which they asked you from the illustration. So if they look for knowledge question, I will strongly suggest please go through the study material, because we are not discussing everything. But if this type of question they ask, they will probably ask you these illustration questions more. Next is about the measurement.